Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Hi there and welcome to the FX Options Weekly Outlook for Friday, July 4th, 2008. I'm your host, Jason Ayres, founder and president of OptionSource.net. The ISE offers 6 major currency pairs, each using the US dollar as the base currency. You can trade your views on the US dollar versus the Canadian dollar, the yen, the euro, the pound, the Aussie dollar, and the Swiss franc. The pair values are tracked under the following symbols. For the US versus the Canadian dollar, CDD, US dollar versus Japanese yen, YUK, US dollar versus euro, EUI, US dollar versus Great British pound, BPX, US dollar versus Aussie dollar, AUX, US dollar versus Swiss franc, SFC. Tonight we'll be focusing on the CDD, the YUK, the EUI, and the BPX. Use the ISE symbol to view the pair value charts through your current charting software provider. To calculate the pair value, simply multiply the spot market value by 100. All currency pairs are multiplied by 100 except for the US dollar versus the Japanese yen, which is simply multiplied by 1. As you can see here, if the spot market value of the US versus Canadian dollar is 0.9845, simply multiply it by 100 to get the index value of 98.45. Please note that for the euro, the Great British pound, and the Aussie dollar, since they are the base currency in the spot market, the ISE FX options charts will appear inverse. We're going to start off with a weekly look at the US dollar index, which gives us a bit of a perspective as to how the US dollar has been performing against a basket of currencies. Last week we identified what appeared to be a bear flag. You can see that we actually played down into that bottom support trend line there. And what's happened is we've created a little bit of a consolidation over the course of the week. You can see that we tried to dip down below, but it appears to be maintaining some sense of support there. It is quite conceivable that we could see a retest of the upper trend line here up towards the 74 level. If we look at our RSI, it's starting to cross up, pointing towards a increase in an upward momentum. And our MACD still continues to maintain its upward momentum as well. Should it break below that trend line, though, a test of that 71 range is likely. However, at this point, we'll be keeping in mind that we do see a little bit of a base forming down at the 72 there, and we'll be looking at that and keeping that in mind when reviewing our currency pairs. We're going to start with the CDD, the US versus the Canadian dollar. We thought that we might see a follow-through on the trend down to the 100 level, but suggested to be cautious because we saw the pair testing a 50% retracement of the previous trend that saw us trade into the 103 level. As you can see, we had a fairly significant bounce off of that into the 102.5 range, where we found resistance. A break above the pivot point at the 102.25 would likely see us retest the 103. However, if we take a measured move or a retracement of the previous downtrend, we can see that we're playing into that 61.8% retracement, which represents a significant Fibonacci resistance. A measured move to the downside would see us actually play right into that 100 price range that we suggested from the previous week. If we look at our MACD, we can see that our MACD kissed and then pulled off. So still suggesting that there's a room for a downside move. Little confusion on the RSI. It's kind of playing along that 50% range. It dips down and then crosses back above. So there's a little indecision here. So we'll stand back and we'll see what happens. The YUK, the US versus the Japanese yen, we saw a break below a pivot point there at the 107 mark and saw it trade down into our 106 support level. It was suggested that we saw a little bit of consolidation taking place at that 106 level, and as you can see how these candles dipped down but then closed up and above, we did find some support. We suggested that that support would likely see us play back into the 107 range. Okay, at this point, we're actually testing a 50% retracement of the previous move, which suggests that we may get a little bit of a drop to the downside. Should this happen, a measured move or an extended move would see us play right back down into that 105 mark. Both our MACD and our RSI are showing a little bit of a difference of opinion here. On the MACD, we've got it still pushing downwards, although on the histogram showing a little bit of strength to the upside. Our RSI has just trickled over that 50% line, but we'd like to see a little bit of a consolidation take place along this 107 level, which again represents a resistance that we identified previously. So we'd like to see a little bit of a consolidation before we could take the bounce off that resistance at the 107 and place some put options down into the 105. The EUI, the US versus the Euro, well, we were actually looking at it bouncing off or playing along a support level at the 63.5. We suggested that a break below would likely see us trade down into the 62.50. We actually found a little bit of a support level here at the 62.75 before we had a real aggressive move back up and above that 63.5. At this point, there's a high probability that we'll see a little bit of a retracement back down into that 63.5 level. If that 63.5 level holds, you're likely to see a push over up towards that 64 mark. So good opportunity on a pullback and a little consolidation at that support at 63.5 to line up with some call options. Our MACD is still cross down, suggesting that there is a potential for a continued move to the downside. Our RSI maintains its position below that 50% level again, so we're not seeing a confirmation with respect to a continuation to the upside. I'd be cautious on any longs, but look for a little bit of a pullback and a consolidation at that 63.5 to open the window up for a nice little push up into the 64 range. Finally, the BPX, the U.S. versus the British pound. Well, we saw a break below that 50.5, which we thought, which we saw a break last week. We suggested that we would play down into that 50 level, which represented a support based on these previous lows here. This did indeed happen. We then saw a retest of the 50.5 as it bounced off that support level. Our MACD is starting to cross up. Our RSI is still starting to cross up. However, if we get a break above that 50.5, we'll see a nice little continuation up into the 51, which would be our next logical target. However, if we see a consolidation at that resistance, then a pullback into that 50%, or sorry, into that 50 point focal area is a likelihood. Upon a break of that pivot point at the 50, we would be targeting a move down into that 49.5, which is the next logical support level for the BPX. Once again, I'm your host, Jason Ayres, founder and president of OptionSource.net. Thank you very much for joining me on this July 4th. Hope you've had a fantastic holiday, and we'll see you here next time.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX options trade alerts, just visit www.optionsource.net. To learn more about ISE FX options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.